ExamPrep.School. Missouri Accident and Health Insurance Producer Exam. Exam Code 51. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Accident and Health. Field Underwriting Procedures. Accident and Health. Other insurance concepts. Accident and Health Policy Provisions, Clauses, and Riders. Accident and Health Social Insurance. Accident and Health Types of Policies. Missouri Accident and Health Statutes and Rules. Missouri Statutes and Rules common to all lines. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which characteristic is most indicative of a basic medical expense policy as opposed to a major medical expense policy? A. High lifetime maximum and broad coverage after a deductible. And B. Coverage of specific services up to fixed limits without a deductible. C. Unlimited benefits with annual stop-loss protection. D. Comprehensive benefits with significant coinsurance percentages. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. Basic medical expense policies typically provide first dollar coverage for specified services with fixed benefit limits and no deductible, while major medical policies feature broad coverage, higher limits, deductibles, and coinsurance. Reason A is not correct. High lifetime maximums and deductible provisions are hallmarks of major medical policies rather than basic plans. Reason C is not correct. Unlimited benefits and stop-loss protection are features associated with major medical coverage, not basic plans. Reason D is not correct. Significant coinsurance percentages denote major medical arrangements, whereas basic plans offer fixed dollar benefits without coinsurance. Question 2. Which best describes how a deductible affects the insured's payment obligations under a medical expense policy? A. Raises the insurer's coinsurance percentage responsibility. B. Decreases the insurer's maximum lifetime benefit. C. Increases the initial amount the insured pays before benefits are payable. D. Eliminates copayments for covered services. The correct answer is C. A deductible requires the insured to satisfy a specified amount of out-of-pocket expenses before the insurer begins to share costs. It does not alter benefit limits, coinsurance splits, or copayment obligations. Reason A is not correct. The coinsurance split remains unchanged by the deductible. It only determines when cost sharing begins. Reason B is not correct. Deductibles do not reduce the insurer's lifetime benefit limits. Benefit maxima are separate policy provisions. Reason D is not correct. Deductibles and copayments are distinct cost-sharing mechanisms and do not eliminate each other. Question 3. Under a major medical policy with a 75 divided by 25 coinsurance provision, what does the 25% represent? A. The share of covered expenses applied to the annual deductible. B. The percentage of covered charges the insurer pays once the deductible is satisfied. C. The portion of the premium allocated to covering hospital expenses. D. The percentage of covered charges the insured must pay after the deductible is met. The correct answer is D. Coinsurance percentages indicate the insured's share of covered expenses after satisfying any deductible, with the insurer covering the complementary percentage of eligible charges. Reason A is not correct. Coinsurance applies after the deductible is met and does not count toward the deductible itself. Reason B is not correct. The insurer's share is the complementary percentage, 75% in this case, not the specified 25%. Reason C is not correct. Premium allocations are unrelated to coinsurance. Coinsurance refers to claim payments. Question 4. Which statement accurately describes a copayment in a health insurance plan? A. A percentage of the total claim filed. B. A fixed dollar amount due at the time of receiving the service. C. A variable fee based on provider network tier. D. The amount reimbursed by the insurer after meeting the deductible. The correct answer is B. A copayment is a predetermined fixed dollar fee paid by the insured at the time of service, distinguishing it from coinsurance, which is percentage-based, and from deductible reimbursements. Reason A is not correct. Percentage-based payments are a hallmark of coinsurance, not copayments. Reason C is not correct. Copayments are generally uniform fixed fees and do not vary by network tier. Reason D is not correct. Copayments are paid at service time and are not reimbursements after fulfilling a deductible. Question 5. In an HMO plan, with a gatekeeper model, what is the primary role of the designated gatekeeper physician? A. To determine member eligibility for plan coverage. B. To finance specialty care directly for members. C. To set annual premium rates for the HMO. D. To coordinate patient care and provide referrals for specialty services. The correct answer is D. In a gatekeeper model, HMO, the designated primary care physician, manages and coordinates patient care by evaluating needs and authorizing referrals to specialists within the network. Reason A is not correct. Eligibility determination is an administrative function of the insurer, not the gatekeeper physician. Reason B is not correct. Financing specialty care is the insurer's function. The gatekeeper oversees referrals, not payment. Reason C is not correct. Premium rate setting is performed by the insurer or actuaries, not by the gatekeeper physician. Question 6. Maria has a PPO plan with $500 in-network and $1,000 out-of-network deductibles. Both already met. 80% in-network and 60% out-of-network coinsurance, and benefits based on usual, customary, and reasonable UCR charges. She obtains services from an out-of-network provider whose billed charge is $1,200, but whose UCR is $1,000. How much will Maria pay for this service? A. $200. B. $400. C. $800. D. $600. The correct answer is D. The correct answer is $600 because the plan covers 60% of the $1,000 UCR allowed charge, $600, leaving the insured responsible for the remaining $400 coinsurance plus the $200 balance billing above UCR, totaling $600. Reason A is not correct. This distractor is incorrect because it only accounts for the balance billing portion and ignores the 40% coinsurance on the allowed amount. Reason B is not correct. This distractor is incorrect because it reflects only the coinsurance share and omits the balance billing above the UCR. Reason C is not correct. This distractor is incorrect because it overstates the insured's liability by including an extra deductible or misapplying balance billing calculations. Question 7. Under a typical point-of-service POS plan that requires a primary care physician referral for non-emergency out-of-network services, what is the most likely outcome when an insured obtains non-emergency care from an out-of-network provider without first securing the required referral? A. Plan covers at in-network coinsurance rate after in-network deductible. B. Plan pays full UCR amount, and the insured pays any amount above UCR. C. Plan covers at out-of-network coinsurance rate after the higher non-network deductible is met. D. No coverage is provided, and the insured is responsible for the full charge. The correct answer is D. The correct answer is no coverage, because POS plans require a PCP referral for out-of-network services. Without the referral, the plan denies benefits and the insured is responsible for the entire charge. Reason A is not correct. This distractor is incorrect because coverage at in-network rates only applies to network providers and does not extend to out-of-network services without referral. Reason B is not correct. This distractor is incorrect because POS plans do not pay full UCR amounts for services without referral. They typically deny coverage for non-emergency care without referral. Reason C is not correct. This distractor is incorrect because out-of-network coinsurance benefits only apply when a referral is obtained. Without it, no coverage is provided. Question 8. For a disability income policy that uses the own occupation definition of total disability is best characterized by the insured's inability to perform which of the following? A. The substantial and material duties of any occupation for which the insured is suited. B. The non-essential functions of the insured's occupation. C. Any occupation in which the insured could earn at least 80% of prior income. D. The substantial and material duties of the insured's regular occupation. The correct answer is D. The correct answer is that total disability under an own occupation definition occurs when the insured cannot perform the substantial and material duties of their regular occupation. Reason A is not correct. This describes an any occupation requirement rather than an own occupation definition. Reason B is not correct. Total disability refers to substantial and material duties, not non-essential functions. Reason C is not correct. This reflects an earnings threshold for any occupation rather than own occupation duties. Question 9. In disability income insurance, the coordination provision for partial disability benefits reduces the payable benefit by A. Subtracting actual earnings from employment during disability. B. Deducting a percentage equal to residual earnings. C. Applying a cost of living adjustment based on inflation. D. Paying a flat percentage of the total disability benefit regardless of earnings. The correct answer is A. The correct answer is that the coordination provision for partial disability benefits reduces the benefit by the actual earnings earned during the disability period. Reason B is not correct. The provision uses actual earnings, not a percentage of residual earnings. Reason C is not correct. Cost of living adjustments apply to benefit increases, not partial disability coordination. Reason D is not correct. A flat percentage ignores actual earnings and does not reflect coordination rules. Question 10. Under a residual disability provision in a disability income policy, the residual benefit is determined by which formula? A. Monthly benefit multiplied by lost earnings divided by prior earnings. B. Monthly benefit minus the amount of actual earnings. C. A flat percentage of the monthly benefit regardless of earnings lost. D. Monthly benefit multiplied by number of duties lost divided by total duties. The correct answer is A. The correct formula under a residual disability provision is to multiply the full monthly benefit by the ratio of lost earnings to prior earnings. Reason B is not correct. Subtracting earnings from the benefit ignores the proportional relationship required. Reason C is not correct. A flat percentage does not reflect actual earnings loss proportion. Reason D is not correct. The number of duties lost is not used. Earnings ratio is the basis. Question 11. Under a standard recurrent disability provision, a subsequent disability due to the same or related cause will be treated as a continuation of the prior claim if it occurs within how many months of returning to work? A. 1 month. B. 6 months. C. 3 months. D. 12 months. The correct answer is B. The correct answer is that a recurrent disability occurring within 6 months of returning to work is treated as a continuation of the prior disability. Reason A is not correct. 1 month is shorter than the standard reinstatement period used. Reason C is not correct. 3 months is below the typical 6-month recurrence window. Reason D is not correct. 12 months exceeds the standard policy recurrence timeframe. Question 12. Sarah is applying for a disability income policy. She has a tight budget, but has sufficient savings to cover 2 months of lost income. Which elimination period should she choose to minimize premiums while ensuring coverage kicks in if she becomes disabled? A. 30-day elimination period. B. 60-day elimination period. C. 90-day elimination period. D. 180-day elimination period. The correct answer is B. The correct answer is a 60-day elimination period because it balances a lower premium with Sarah's ability to self-fund 2 months of disability, ensuring coverage begins when needed. Reason A is not correct. A 30-day elimination period leads to higher premiums and does not capitalize on her savings to lower costs. Reason C is not correct. A 90-day elimination period might offer lower premiums but exceeds her 2-month funding ability, risking an uninsured gap. Reason D is not correct. A 180-day elimination period greatly reduces premiums but leaves her without income protection for too long. Question 13. Which of the following activities of daily living, when an insured is unable to perform without hands-on assistance by another individual, typically triggers benefit payments under a long-term care insurance policy? A. Meal preparation. B. Housekeeping. C. Transferring. D. Medication management. The correct answer is C. The correct answer is transferring because long-term care policies typically require inability to perform core ADLs, such as transferring without assistance to trigger benefits. Reason A is not correct. Meal preparation is classified as an IADL, not a core ADL trigger for benefit eligibility. Reason B is not correct. Housekeeping is considered an instrumental ADL and does not trigger core ADL benefits. Reason D is not correct. Medication management is an IADL and does not count as a core ADL trigger. Question 14. Under a long-term care insurance policy's cognitive impairment benefit, which condition qualifies an insured for benefit eligibility? A. Inability to recognize familiar people and places. B. Requiring verbal cueing to complete bathing tasks. C. Needing assistance with ambulation due to joint stiffness. D. Difficulty dressing caused by limited range of motion. The correct answer is A. The correct answer is inability to recognize familiar people and places, because cognitive impairment benefits require a demonstrated deficiency in memory or orientation that leads to substantial supervision needs. Reason B is not correct. Needing verbal cueing for bathing is an ADL loss, not a cognitive impairment criterion. Reason C is not correct. Assistance with ambulation due to joint stiffness reflects a physical mobility loss, not cognitive impairment. Reason D is not correct. Difficulty dressing from range of motion limits is a physical limitation rather than a cognitive deficiency. Question 15. Angela holds a long-term care policy covering skilled nursing care when medically necessary. After hip surgery, she's admitted to a licensed facility and requires daily professional services. Which of the following services best qualifies as skilled nursing care under this policy? A. Reminding a patient to take medications and documenting compliance. B. Helping a patient bathe and dress when assistance is needed for safety. C. Administering wound care and therapy as ordered by a physician. D. Preparing meals and monitoring nutritional intake according to a meal plan. The correct answer is C. This option involves specialized medical procedures, wound care, and therapy that require licensed nursing skills and a physician's order. Meeting the definition of skilled nursing care, under the policy. Reason A is not correct. Medication reminders and documentation are custodial tasks that do not require the advanced training or licensure of a skilled nurse. Reason B is not correct. Assistance with bathing and dressing are activities of daily living, classified as custodial care rather than skilled nursing. Reason D is not correct. Meal preparation and nutrition monitoring are support services, not medical procedures requiring licensed nursing skills. Question 16. Which of the following requirements typically applies to a group health insurance policy but does not apply to an individual health insurance policy? A. Enrollment by at least 75% of eligible employees to satisfy a minimum participation rule. B. Evidence of insurability provided by each applicant upon initial enrollment. C. Residence within the insurer's service area as a condition for coverage. D. Payment of premiums on a periodic basis as specified by the insurer. The correct answer is A. Group health insurance plans commonly include a minimum participation requirement, often 75% of eligible employees, to help ensure adequate risk pooling. Individual policies do not impose a participation threshold. Reason B is not correct. Group plans typically guarantee issue for eligible employees during initial enrollment, so evidence of insurability is not required at that time. Reason C is not correct. Both group and individual health policies generally require insureds to reside within the insurer's approved service area. Reason D is not correct. Both group and individual health insurance policies require timely payment of premiums according to the insurer's schedule. Question 17. Sarah, an employee of XYZ Inc., receives a certificate of insurance after enrolling in her employer's group health plan. She reviews both the policy and the certificate and wants to know which document establishes her contractual relationship with the insurer. A. The employee's signed enrollment application submitted to the plan administrator. B. The certificate of insurance delivered to the employee as evidence of coverage. C. The master policy and the certificate together constitute the binding contract. D. The master policy under which the employer is contractually bound to the insurer. The correct answer is D. The master policy is the actual contract between the insurer and the group sponsor. The certificate merely evidences individual coverage details and is not the binding agreement. Reason A is not correct. Confusing the enrollment application with the contract ignores that applications initiate coverage but are not the binding agreement between insurer and sponsor. Reason B is not correct. Believing the certificate establishes a contractual relationship overlooks that it only provides evidence of benefits, not the actual agreement. Reason C is not correct. Assuming both documents form the contract misstates the role of the certificate, which does not bind the insurer. Question 18. Which of the following procedures is most commonly classified as a basic service under a typical dental insurance policy? A. Amalgam tooth filling. B. Prophylactic dental cleaning. C. Porcelain crown placement. D. Orthodontic appliance adjustment. The correct answer is A. Basic services coverage generally includes restorative procedures such as tooth fillings, whereas preventive services cover cleanings and major services cover crowns and orthodontics. Reason B is not correct. This is a preventive service aimed at maintenance rather than restorative repair. Reason C is not correct. Crowns are classified as major services and are not part of basic coverage. Reason D is not correct. Orthodontic adjustments are considered major or specialty services, not basic services. Question 19. Under the entire contract clause in a health insurance policy, which of the following becomes part of the contract when attached at issue? A. Policy summary and the employer's summary plan description. B. Completed application and any attached riders and endorsements. C. Oral statements made by the agent during solicitation. D. Representations contained in the insurer's sales literature. The correct answer is B. The entire contract clause specifies that only the policy itself, any endorsements or riders, and the signed application constitute the full contract. Extrinsic materials and oral statements are not binding. Reason A is not correct. Those documents are informational but are not part of the binding contract. Reason C is not correct. Oral statements are not incorporated under the entire contract clause unless reduced to writing and endorsed. Reason D is not correct. Sales literature is promotional and not enforceable as part of the contract. Question 20. Under the time limit on certain defenses provision, after the contestable period has expired, an insurer may still void a health policy for which of the following reasons? A. Non-payment of premium during the grace period. B. Material misstatements in the application discovered after issuance. C. Fraudulent statements on the original application. D. Late submission of proof of loss. The correct answer is C. Once the specified time limit, typically 2 years, has passed, the insurer cannot void for misstatements except that fraud remains a valid ground for contesting the policy. Reason A is not correct. Non-payment of premium is governed by grace period and reinstatement rules, not this defense provision. Reason B is not correct. Misstatements in the application become incontestable after the time limit elapses unless they rise to fraud. Reason D is not correct. Late proof of loss affects claim payment, but is not a basis for voiding the policy under this provision. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.